University of San Francisco, Business 305, Principles of Finance, Goldman Sachs, Team One, Take One, and Action.
Hello, we are doing a stock evaluation for Goldman Sachs. I am Sabrina Hasbanian. This is Anastasia Cabrera, and that is Calvin Wood.
All right, for our overview, we're going to do the Goldman Sachs background, the financial analysis, stock evaluations, and some recommendations.
So a little bit of background on Goldman Sachs. Our ticker symbol is GS. It is a public company found worldwide. Headquarters are located in New York City. And we focus on investment banking, institutional client services, and investment management funds, as well as our assets, which lead up to just under $1 trillion at 0.92 billion.
So the products and services that we specialize in are investment banking, securities, investment lending, investment management, asset management, and mutual funds. However, the major contributions to our revenue and growth would be investment banking, asset management, and mutual funds.
Some of our leaderships, our main ones is David M. Solomon, he's the CEO. Lloyd Langford, he's the chairman. Stephen M. Shearer, he's executive VP and CFO. John E. Warden, president and COO. John F. Rogers, executive VP and chief of staff. Sarah E. Smith, executive VP and head of global compliance.
So just a little bit about our bank ratings. The first is JP Morgan, which is at 2.5 trillion. Bank of America, which comes in second at 2.2 trillion. Wells Fargo, which comes in at 2 trillion exactly. Citigroup, which is at 1.8 trillion, and Goldman Sachs, which is right under $1 trillion at 0.92 billion.
So looking at our SWOT analysis, you can see that our strengths are high profitability and margin, high brand equity, and recruitment and retention of talent, where our weaknesses, especially right now, are legal issues, fraud and bribery cases, insider trading, and underwriting bonds. Opportunities can focus on investment banking in the US and Southeast Asia, and threats would include conflicts of interest and consolidations and a volatile financial market.
Alright, so here's our financial conditions. Our ROA for Goldman Sachs is 0.4, our OE is 6.3, our profit margin is 16.8, our debt to equity is 3.0, and our overall conditions is below average.
For our next set of financial conditions, we're looking at Goldman Sachs, which has a forward PE of 9, a dividend yield of 2.4%, operating income that comes in at 11 billion, revenue growth at 28%, and a net income of 2.5 billion overall, as well as an EPS of 19.21. And our overall conditions for this are average.
So our financial standings would be at 0.9 billion in assets, whereas JP Morgan Chase is at 2.5 trillion, Bank of America is at 2.3 trillion, Wells Fargo is at 2 trillion, and Citigroup is at 1.8.
Right here is our technical analysis for year 3. For our target price is greater than our current stock price, which is $234.09, and 205 for our current stock price, which makes our premium at 11%, and our RSA and MACD is down, which causes downward momentum, increasing volume, and a downward price trend, which is a downward momentum again.
So for our perpetuity model, as you can see, we're at a risk-free rate of 2.2%. Our beta is at 1.1, and our expected market rate is 8%. And we decided to go with a medium range discount value, which is found at 6%, and the price of the stock at that rate is $163.80.
So if you take a look at our Gordon growth, the intrinsic value of the stock is at 187, where the current stock price again is at 205. And if you're looking at a 1% growth range, which is medium, you have a value of 187.1, which is below the current stock price, with the discount rate of 7.2%.
Alright, now we have the multiple approach. The intrinsic value is less than the current stock price at $183.04, and the current stock price is $205. We have the premium at 11%. Our PE ratio is at 14. Our stock value is at $183.04, and our range is medium.
And for our discounted cash flows. At the moment, our intrinsic value is less than our current stock price, which is at $200, and the stock price is at $205. And we decided to use a 2.3 discount rate. And at this point, at 8% for the discount rate, we are at a stock value of $200.48. So that's in the medium range.
So if you take a look at our scenario the different weights that we come in with an intrinsic value of 191, which is below current stock price, which is at 205 with a discount rate of 7.2%. So our recommendation is to sell.
And our final recommendation is that we are going to sell the stock. Our intrinsic value is at 191.07, which is less than our current stock price at a discount rate of 7.2%. Our total trades has 12 in them. Our index is right forwards, right futures, right calls on futures, buy puts on futures. Our ETF, as well as for, is sell short, right calls, buy puts. And our stock, as well as for, is sell short, right calls, and buy puts.
And finally, for our references, we use Goldman Sachs, Yahoo Finance, Wall Street Journal, stock charts, and
Thank you so much. If anybody has any questions, please feel free to ask us.